when we look at, these kind of China tech names, even in the past during the Trump administration, there has been policy that would, restrict them and also put them on, some sort of restrictive list. We've seen that before. I don't particularly mean that we will have no impact this time. But from what we see in terms of the offshore dollar market, in terms of the Chinese credit, it has changed a bit from the last Trump administration in the sense that a lot of support, a lot of buyers are basically from some of the Chinese investors, some banks, some asset managers as well. So that's why yesterday when, when we look at the incident, the bonds in New York, the day before, the bond in New York actually widened about 15 basis points. Then when it comes back to Asia, it's only widened about like 5 basis points. Because I think, a lot of investor support, has been more from the Chinese side. So we expect headline risks would still continue with the Chinese tech names. That would continue given, by the end of the month, Trump administration will be there. So what we think would be technical support would still be there. I think that would be one of the factors, to support these kind of names. But at the moment, we, prefer to be neutral at this stage for these China tech names because valuation-wise, not particularly sort of, very juicy.
Right. At what point do you think that the upside would make sense for some of these technology names, given that things are only going to get murky as far as geopolitical tensions are concerned between the U.S. and China? And obviously, tech would be at the center of it because this is not just a trade war, it's a tech war as well for tech supremacy.
Yeah, I agree. I mean, it's difficult. It's because of a political tension. But at the same time, on the offshore dollar market, we also look at rating. So all these China tech names, basically, they are investment grade bonds. They also have a lot of cash on hand. And also their leverage is, pretty low as well. So in a way, what people looking at would be, their repayment risk, the default risk, which, given they are high rating, cash rich, we reckon they could be supported. But at the same time, spread will be volatile going forward because of all these headlines. It's hard to, make a point. I think what people would compare would be the U.S. tech, similar name, compare with the Chinese tech, and what sort of spread premium in the past, it has been, and what about now? And I think people would try to compare at that point. But at this point of time, I think people just be, sort of neutral for now and wait for sort of, the spread widening.